Aaron Maddich, Debbie Acott, and also Andrew Duncan supporting. So I would hope we've got the ability to respond to any questions you've got after we just step through the information we wanted to discuss around rates. Just briefly, so rating notices go out to Aucklanders early August, and ahead of that, as has been customary in recent years, we're giving Aucklanders online access so they can see their rates bill from tomorrow, so that will be available on the council website. I guess the key messages and points to emphasise, and obviously there's been a fairly lengthy discussion that held concerning rates for this financial year through the LTP budget discussion, and I was quite keen to just emphasise two or three of the key drivers for the changes that a number of Aucklanders will see in their rates bill for this current year. So the first one of those, and the most important, is the impact of the property revaluation that was completed late last year. That's certainly been a very significant driver, and we'll come back to giving you a sense of what that means. Another really important factor is that this financial year marks the end of the transition legislation the government put in place, which enabled council to limit the rating increases for many properties across Auckland over the last 3 years. So that legislation has now passed, and therefore this will be the first year where the new council is operating with no caps on rating increases for Aucklanders. The other driver is council's own budget, and in regards to the impacts of those budget requirements on residential rate, there's a 4.2% increase in general rate for households for next year. That's an average, and about distribution of that in a moment. And also, of course, the GST inclusive transport levy of around $114 for the year. Those are the two big budget drivers, but those other drivers being the impacts of revaluation and also the end of transition. I've hinted at it, but certainly wanted to acknowledge that, particularly in respect to revaluation, there is quite a significant disparity in how individual rating bills will look for different Aucklanders and different properties for this current financial year. And to give you a feel for that, of about 400,000 residential properties, 90% of those will either be experiencing a decline in their rates or an increase in rates of less than $500. But in terms of the other 10%, where there are some significant movements, and 10% talks to about 40,000 properties, around 9 or 10,000 of those properties will be looking at rating increases in this financial year in excess of $1,000, and the rest of them, so that's about 30,000 properties, experiencing increases between $500 and $1,000. Now, council has been quite busy over the last couple of weeks following the conclusion and adoption of the LTP budget, and we've run a campaign wanting to identify and provide some support for those households experiencing a large increase in their rates bill compared to last year. So we've had both a direct mail campaign where we've targeted properties where we expect larger increases, and we've also had an outbound calling campaign. Now, two or three of the options that we've been wanting to discuss with ratepayers so that they can respond to the increased bill are firstly the ability to smooth rating payments over the next 12 months. So that's in return for utilising direct debit. There's an ability to just smooth that payment profile just to enable households to manage their cash flow a little bit more easily. And also we've got the government rebate scheme, which we've been keen to promote. Gives households the ability to have a rebate of up to $610 for the year. And also finally there is council's rates postponement scheme, where there is the ability for householders to defer paying rates in the current year and revisit that in future years, or indeed upon sale of the property, that deferred rate is paid at a future point in time. So, look, that's the key messages we wanted to provide. I think we've sent out a handout ahead of the meeting and it's available here, so there's further information there. But by and large, it's just a recap of those key drivers that I've gone through there, and we're happy to answer any questions.
We saw issues last year with the property valuation stuff that went up online and people had difficulty being able to access that. So what kind of checks and balances are you going to put in to ensure that doesn't happen again?
We've just got to keep a close eye on it. We've actually been discussing this in the last couple of days. We want to ensure that council staff themselves are not a reason why that information won't be broadly available to Aucklanders. So we do have an initiative internally to make sure that council staff are not clogging information can be available to Aucklanders from tomorrow.
So you've tested it and you're pretty happy it'll be coming through?
We've tested it, but we are expecting quite large numbers, so we've just got to keep a close watch on it.
You expect an increase in the number of people who will seek some sort of support in terms of the rebate or postponement?
Yes, we are, and I might ask Debbie to comment in a moment. The feedback from some of those initial phone calls has been quite positive. So people have been appreciative of council reaching out and making the initial contact. I think it's always interesting to us that perhaps the rebate option, people aren't more aware of it, and what we're wanting to do now is just take the opportunity to ensure that people, as many people as possible who qualify, are made aware and are encouraged to apply.
Yeah, just might add, we're really hoping that everybody would be eligible for a rebate will apply, because you know that $610 could really make a difference to a household trying to pay the rates. So for people who are on fixed incomes, there's a website, the DIA's website, where you've got a calculator to see if you might be eligible for that.
Historically, there's always been an take-up of that scheme.
Yeah.
Older people in particular just don't like taking it up for some reason that no one really knows why. Obviously, just publicising it was not going to fix that. Has council got any plans to do any kind of work or research into why it is that people don't take up the scheme as much as they could?
So we've been working with our seniors panel on this, and yeah, we have a stall at the Seniors Expo in Franklin. We're doing everything we can. We had a surge at the end of last year because we put some extra information into our Auckland intern. So we're doing everything that we can. We're really hoping that people will apply. But yeah, we probably will do some more research into that.
I understand the Department of Internal Affairs is also looking at the administrative requirements around applying to see whether they can make those a bit more customer friendly. They haven't decided what they're going to do, but they are looking at it, I understand.
Matthew, when you look at rate increases, not as just the general rate, but including the various targeted rates, such as the new targeted rate for residential and the various stormwater and wastewater programs around the suburbs, you have a range of increases which are different from those you've talked about. For a small apartment in the CBD, the increase from $100,000 apartment is 27%.
That's including the additional city centre targeted rate of
City centre rate,
$50 a year.
transport
and,
rate.
Yep.
Those people who probably don't like it. And the general rate. For $1 million property, the total, excluding any targeted rates for wastewater, etc., is about 4%. Have you got any ideas on how you might do some equalisation?
That's a big question. I want to understand the question better. So what you're saying,
In
am I?
percentage terms,
Yep.
there's a very large distortion. In dollar terms, it may not be.
Well, look, I mean, I think we would acknowledge, as I've sought to, and we have in our collateral, we've acknowledged, I would rather use the word disparity than distortion. I mean, the tax system is the tax system, and it's imperfect, and it's tricky, and it's tough. But how the numbers fall, it means yes, in any given year, particularly when you overlay a revaluation and or you include the impact of council considering new charges in the manner of the transport levy, in the manner of a $50 a year charge for inner city apartments, you're going to have disparate impacts that might look very different at a percentage level than what they do at a dollar level. Look, there is some further work on the table, particularly around our rates postponement scheme, where we think that there is more ability for people to access that scheme, become more accustomed to using it as a way of mitigating impacts in a given year from new charges, or perhaps, particularly in the case of the elderly, so asset rich, income poor, mitigating the impacts over time. If the case is that council needs to, run budget requirements whereby the general rate is systematically increasing a little bit ahead of the rate of inflation and therefore the rate of increase in their income. So there is some work going on in the background whereby we want to examine every opportunity within that rates postponement scheme to make it as simple as possible for people to understand it and to be able to access it and use it if they wish. But in regards to impacts of transport levy, the council has resolved, and there is a little bit of follow-up work on the table this year that we will look at in regards to the 16-17 annual plan, looking at the relative share business and residential, and I think within business, considering whether the flat charge approach which we've taken to date remains appropriate or whether there needs to be some consideration of a capital-based charge. And obviously that could have a meaningful impact on that disparity impact that you've raised. But to keep it simple, it is what it is. It's a property-based tax system. There will be disparate impacts. We have rebates, postponements, payment smoothing options, and currently, in terms of the toolkit, that's as much as we've got for people to work with.
So are you suggesting that perhaps you're looking towards a mechanism like Councillor Roscoe proposed in terms of the business differential, so using 0.33 as the business differential for, say, a transport target with his proposal, which then would
So a number of, in adopting the final budget, a number of resolutions were also passed by council that essentially flagged further consideration during the course of this next annual plan. So explicitly, one of those was focused on the business differential in terms of the transport levy. So I'll just repeat it. We are going to look both at the relative distribution of the levy, residential versus business, and within business, flat charge versus capital.
Would any of your workings or your calculations be available to the media just as guidance?
Well, I think it's early days and we've yet to start the work. When we do and as we do, it'll be available on the public agenda. It'll be part of committee discussion, I imagine, this side of Christmas, and I think there'll be plenty of opportunity for media to be able to see what it is council are considering.
So the work we've done for Ross for the 2015 budget, that's not available.
The work, so for those who were in the council meetings, there was an extensive debate of all of the points that you've asked about. Obviously you're referencing that as the base of your question. So that's all, the extent it was filmed is possibly on the public record somewhere, but there's also discussion of those things in the council papers some of those issues in the council papers at the time, which are available.
Some of that calculation work that you did for Ross, is that available to us? I understand you did some work.
I think we'd be happy to, perhaps we can just talk offline, and if you can make that a precise question, we can see how we can respond.
Matthew, how many households were affected by the rates cap that's now coming off?
Have a bit of a stab of it and then throw it to Aaron. But I think, Aaron, is that around the 10,000 mark?
So last year there was about 50,000 properties that had their increases capped. Not all of those would have had their increases capped this year. Some preliminary work would be about 25,000 of those 50,000 would have faced further caps if the legislation was available, but that's sort of some rough figures.
So when you say last year, do you mean 2014?
14-15, yeah, so the financial year that's just completed.
So there would have been 50,000?
Yeah.
I see, so if the legislation had continued, there would have been about another 25,000?
About it.
Of those 50, about 25,000
Right.
probably may have
Maybe
been,
continued,
yeah.
right.
But dependent on the evaluation as well.